Thank you very much for that, and apologies for making you wait for a month, but hopefully after this meeting and over the next few months you'll find the wait worthwhile. Really what I want to do is give you an update of where we are and what we've achieved through drilling this well, and really give you some thoughts of where we're planning to go and some of the timings as to when new information will become available and future rises become true. In terms of the rises, actually it was only 700% this year, or last year. It was 800% the previous year, so 2 years in a row we're there. It starts becoming increasingly difficult to achieve and keep up that sort of rate. So, but we think now it's de-risked, doubling and trebling is quite adequate. Obviously, legal disclaimer, I'm not going to go anywhere there. For those of you that are new to the story, I'm just going to give a very brief indication. We are in the North Sea. Xcite was specifically created to develop the Bentley oil field. Obviously, in succeeding there, we don't stop there. And very recently, on the latest bid round, we did actually get effectively an extension to the block we retain with more prospects in it, which are also heavy oil. I'll go a little bit into those. And with those two extra ones, we're talking about having an oil in place somewhere around the billion barrel mark. It's still very much to be defined because this well actually broke all of the optimism that we had because it's more than we know, but we're not quite sure how much. So these numbers in terms of oil in place and in terms of recoverable are work in progress, and we can't give you definitive answers. And those will take some months because they were outside the range that we had predicted. So you will have to bear with us on that one. But certainly we're confirming that it is still a high porosity, high permeability, and now certainly a high productivity index. And the 6-well helped us determine that. Obviously, what it did do is that it took us from an expected range of 1,200 to 2,400 barrels a day between our low and high case. We knew we'd max out around 2,800. We actually got 2,900. So we were very, very pleased with that. And it does show the mobility and the reservoir properties are at around or partially above our high-end expectations. And what we have done is continue to learn about this, allowed us to be a little less conservative, and but we did achieve the whole team achieved a 500-meter well, really with no significant issues, and obviously achieving stabilized flow rates, which was the one thing that most people said could not be done. But we did achieve that by paying a lot of attention to how the well would operate and how the facilities would operate. And obviously it went very smoothly in terms of that, despite the fact that we had a hose break when we were testing it with water, and we had to resort to effectively the bucket brigade in terms of hiring, I think it was 200 tote tanks, and fill them one at a time over a 2-day period. So that was quite a challenge. Again, I can't be definitive in exactly where we've moved, but the key date in this one is that we won't be able to have new numbers in terms of P10, P50, P90 recoverable numbers until we effectively have redone a lot of work and had that assessed. Our target dates for actually releasing that data is somewhere late February, early March, and effectively that's when we expect to see more things comes on, sort of really more information coming through. However, that doesn't slow us down. We're not waiting for that. It's effectively the first stages of production that we're aiming for is still on target. That doesn't change. Effectively, we are building the same facilities for the first stage. That doesn't change, which is why the waiting for the definitive recoverable number actually doesn't interfere. The whole process of actually moving contingent resources into what you might call bankable reserves is a gradual process. Effectively, the way it works is that when you define and go forward with a project, the reserves get assigned to that project, and then as you work through that project, it goes up to the next level. So it's a 2 or possibly 3-step process of building up these numbers, but in essence, the contingent resources C1, C2, C3 eventually move into P1, P2, P3. And obviously, as you add extra things, you get extra resources moving into the resource category and then moving on into reserves. One thing that we will be fairly confident in is that the chance of success will go from 70% up to over 90. 90 is the barrier that says you've got reserves. Most people don't classify anything. 90 means it's happening. As I say, at this point in time, 750 is our best expectation at the moment of oil in place for the specific field. Again, that's a rough number that will get revised, and certainly we're not expecting to be anywhere near the low, but the low's gone up to over 120 million barrels, and the high at this point in time, 250 is a good go-by. Where the P50 will be, we're still working, and we always have been working on a number of 200 as what we expect without enhanced oil recovery. Enhanced oil recovery can effectively increase that number by 50% to 100%. So, you know, our chairman once jokingly said at the beginning, although he never really jokes, he said this is a 500 million barrel field when we're finished. And certainly we potentially are in line with that. In terms of valuation, obviously we're very pleased and encouraged by the support from our investors. I think we're certainly happy with them. I hope they're happy with us. And our current valuation market cap at the moment is somewhere around above $900 million, or 500 million pounds. So that's equivalent at this point in time of around $4.60 per barrel based on the 200 number. So a share price of £3.80. People, we've seen many people say, oh, well, you've done your work, that's it. We can go home, we can cash out. Well, the answer is, I wouldn't if I was you, because we've got rid of all the risks, and the potential is there to come up to the range of where it's pretty well established that $10 a barrel is the norm for this valuation. And we've certainly seen cases, as in the sale of the Peregrino field, where you're talking closer to $15 a barrel. Obviously, because the enhanced oil recovery allows you to increase these numbers, that's why numbers like this occur. So we still think there's room to double and treble on a fairly, what you might call, safe bet. And certainly we're here to give our investors as much of that value as we can achieve through working it through. It's not going to be instant, but it's not going to be that long term. We should be progressing down this line effectively in the 12 to 18 month period as we get first production, as we prove further bits of the field. Those then will move forward into the plan for the full field production, which then effectively establishes the reserves for the full field. So let me give you a little bit of the background of what happened on the 6th well. The Ocean Nomad was drilling it. Everyone seemed to be following the Betty Knudsen, and unfortunately we never actually ended up using it, but it seemed to be followed around as it moved, and as it didn't do the expected, the share price went down. As it was anticipated to move somewhere else, the share price went up. The fact that we didn't use it didn't seem to matter. But certainly the successes that we did achieve, obviously the pilot well confirmed that on the eastern flank, and I'll show you this in a second, we came out considerably higher than we thought. The reflector in the boulder is quite challenging to actually determine exactly where it is. Obviously, the more wells we get in it, the more we can move it, and I'll show you a little bit about that. But what we did then from confirming that is it gave us effectively a path to follow to put the horizontal well in, which we wanted to achieve a 400-meter well. We achieved over 500 meters, in fact, nearly 550 meters. We flowed that for 36 hours, very much limited by the equipment and the ability to fill tote tanks of 20 barrels each in 10 to 15-minute intervals and get them put across to a barge and moved on. So, but the well flow behaved immaculately, far better than we ever thought it could, and certainly it went a long way to proving up what we'd been saying all along, that previous tests effectively, if you don't operate them in exactly the right way, you get an awful lot of interference and you can't actually see the wood from the trees. We did achieve, obviously, various levels of stabilized flow rates. Initially, we were obviously, looking at making sure we had the minimum, so 1,200 barrels a day for a lot of the time, and then we stepped down to establish a productivity index, and then stepped it right up and kept going. And obviously, when we hit 2,900 barrels a day, we hit the limits of what we could do. So we said, I think we've achieved what we need to, let's go home. So, as I say, we were over the highest expected, and certainly using the productivity index, we knew, and we had actually half the drawdown that we thought we would have. We knew that we could easily be producing 3,000 to 3,500 barrels a day out of this well without any trouble at all if you use slightly bigger facilities. And even at those rates, you're still in very acceptable drawdown pressures, and so it would be a sustainable rate. Obviously, we have total belief that we can now move the contingent resources that are assigned to the first stage production into reserves. This is now a process, so we're also proceeding with we finished the conceptual design of that first stage production. We're moving that on with our contractors and vendors to make sure we can achieve a first oil date before the end of the year. We've got the jackup rig, effectively is in final negotiations for signature, and that should arrive with us sometime in October, November time, ready effectively to start flow, picking up effectively the 6 well and then moving on. In terms of that, the middle one here, this is just a picture of the reservoir and the original plan in the middle. Obviously, we've been able to have a preliminary view of the structure, and effectively the section over on the left, you can see the high structure moves right back towards where we were drilling from, and this is going to add extra reserves in that section. And I have a cartoon later on and show you that effectively all we've discovered is that we haven't discovered everything. is effectively we've proved that there's much more there, but how much more we can't actually tell at this point. Also, the drilling mud that we used, because we knew what the oil was, we knew a lot about it, was a huge improvement. So we had a very engaged hull for both the pilot and the main well, and that helped us get really high quality logs, which gave us a lot of confidence in moving forward. And it also started showing us some of the internal structure within the reservoir, because we keep being told it can't be that good. It just can't be that good. So we say, well, it's difficult to see that it's not pretty good. As we saw, we got a very, very strong response. We were able to zone it between the 6-well pilot that we had drilled and the 1 well we were aiming to. And we had a zone 2, which is the sort of second level down, was ideal, high porosity for putting our horizontal well in. And lower down, you can see slightly small areas where the porosity is lower. And most people say, well, we don't want low porosity. In our case, we do want low porosity layers in there because it slows the water. And if it slows the water, we get higher recovery. If we get higher recovery, we're even better than our best case. So it was encouraging to get both of those. We certainly weren't expecting that. It allows us, as I say, to put another quite a significant area of knowledge into the reservoir. It's proving that this spreads right the way across the rest of the reservoir. So I said I had a cartoon of the well. The dotted line going down is the pilot coming in at an angle, the conservative interpretation of the reservoir was it would be about 73 feet of pay. It ended up being 113 feet of pay, so it's nearly 50% extra. So we seem to have, whether it's flat or domed, we're not sure, a structure which is the orange line coming across, which is the new interpretation. And then effectively the 6Z well, which is a horizontal well, came through there. It came in roughly 20 feet higher than our original interpretation. And then because we were using effectively something called AziTrack, which allows us to see the roof of the reservoir, we actually tracked the reservoir right the way down the whole length of the well. So that certainly gives us some confidence in that direction, which is very helpful. And then as we came in, we actually passed the 1 well, which was where we were supposed to stop, and we kept going for another 150 meters, and then we said, we have enough. We'll stop there. But at that point in time, we still saw no sign of the roof coming down. And as I say, it may have gone down 1 foot more, but we're not sure. But we didn't want to get the well stuck. So we stopped there because we had plenty to get on with. This is the logs out of the horizontal well. I showed this to someone and they said, if this was light oil, you'd have a barnstorm. I mean, this is just incredible. They've never seen sands like this. It was just beautiful in terms of interpretation, and I'm not a geologist. So what are the next steps? Well, the next steps basically is, again, because we're now outside of our original envelope of investigation, we actually have more work to do to be able to convert this into confident numbers. So we have to assimilate and update our reservoir model with the new well information, produce a new in-place number using effectively a full-scale structural model, and then come out with some interim reserves. And again, we will do this in a multi-stage process. We've got to put in the information in to get the first level of reserves in there. It won't be the last answer. We will go in with a pretty conservative one there, which is it's definitely a not less than number, which will fit with the first stage production. As we say, we're very close to finishing the negotiations for the jackup rig. It's specifically designed for combined drilling and production. Yeah, we're expecting that to close. The 15th of January is not a hard drop dead date. I notice people on the blogs are worried about it. The negotiations will finish when they're finished. Whether that's the 15th or not, we will see. And obviously, we have already done a significant amount of design, and we continue to do that and progress that, talking with vendors and securing items to get effectively first oil ready for October, November time. So that's the short term, that's going to keep us busy. Medium term, obviously, the whole progress of this is to move more and more reserves or resources into reserves. But in doing that, obviously, we have to remodel the full field reservoir. That'll go on in parallel with everything else, and obviously will allow us to update with confidence as we go along. And obviously, there will be updates at various points in the in place numbers using those models. What points those will be, we haven't determined yet, but obviously, once we're into reserves, we have a reporting requirement at the end of each year anyway, so it'll be a mixture of those, and then whether we have a competent persons report as well, we'll see. And then obviously, the major thing we will also be doing is submitting a field development plan to the government, which obviously concentrates on the first stage production, but obviously has full life cycle plans. Effectively, those will go in effectively in the second quarter, ready effectively for getting it approved for start of production in the last quarter. And obviously, we're already looking at projects to improve and add reserves, add recoverable reserves, in looking at the projects that are needed for testing enhanced oil recovery, basically continuing to add value to what we currently have. And obviously, delivering first oil is a key target. Whether we achieve just before Christmas, another Christmas present, hopefully, or just after, that will be determined effectively on effectively the scale of things and the things that are achieved before that. But we're certainly targeting there before the end of the year. So I think the story of this is that, you know, this opportunity is not finished. There's still more to come. It is now de-risked, so that part of it is safe in terms of going up to the full value for what we know we have. The successful flow test certainly gives us no doubt there that we're certainly, you know, 200 is a very good number to go by now, and that's without EOR. I think we've proven as a management team that we can do this. It's now effectively, we did the 5 well, we did the 6 pilot, and then we did the horizontal well, and we're in the process of proving commerciality beyond doubt. Obviously, next steps are achieving reserves and adding more and more there and implement the first stage production. So what's the prize? Well, the prize is moving up to the number 2 independent in the North Sea. It's quite a big jump from nowhere. And putting in 200 million barrels of reserves in place. As we said, there's still a doubling and tripling for our share price just in this field alone. And we're not going to stop here. We have and are going to leverage our knowledge into bringing other opportunities to bear and using this business model again, and applying it elsewhere. So it doesn't even stop at 3 times, hopefully we keep going. That's all I wanted to say. Thank you very much.